Bloomberg Audio Studios. Podcasts, radio, news. You're listening to the Bloomberg Balance of Power podcast. Catch us live weekdays at noon and 5 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
Welcome to the threshold of the weekend. Yeah, you made it to Friday. This is Balance of Power on Bloomberg Radio, on satellite radio channel 121, and on YouTube, where we're always standing by live. If you search Bloomberg Business News Live, whether it's what we're doing in Washington or the great programming from World Headquarters in New York, where Charlie Pellet was just talking, you can find it all live in studio right here on YouTube. So we made it to the end of the week, and there's still clearly, as you heard from Charlie, great uncertainty about what the heck is going to happen next week. And we're going to start this. It's going to feel like this on Monday, probably Tuesday and Wednesday as well, as we wait for the word from President Trump on reciprocal tariffs and all the rest that may come together that day. He did talk to the Canadian Prime Minister, one of our top stories this morning. We found this out on Truth Social. The president, I just finished speaking with Prime Minister Mark Carney of Canada, an extremely productive call. Wait a minute, back up there. Prime Minister Mark Carney? What happened to Governor? Well, I guess Trudeau left the building. This could be progress. We agree on many things, Donald Trump says. And we'll be meeting immediately after Canada's upcoming election to work on elements of politics, business, all other factors. That's the 28th of April when they do the election up there. As we see another headline, just went red on the terminal. Putin said to test Trump's willingness to push EU on sanctions. This is going to be a whole other part of the storyline here as we try to find peace in Ukraine. The president talking, of course, with Ukraine and Russia. And now apparently this idea from Vladimir Putin to use Donald Trump, who I think we can argue doesn't have a lot of capital at the moment in Europe, to try to get them to pull back on the sanctions. Another potential win for Russia in that case. As we reach for better news, the cherry blossoms are peaking. Hey, how about it? If you're with us in Washington, D.C., the National Park Service makes it official. You see the tweet? I thought Donald Trump wrote this. It's all caps and exclamation points. Peak bloom, peak bloom, peak bloom. It took one more sunrise and warming temperatures, but we're finally here. It's going to be like 80 degrees tomorrow in Washington. Now, park your good mood as we turn to the economic data. If only Stuart Paul were coming on to talk about cherry blossoms. The problem is we've got a raft of data here making people feel upset on Wall Street. The PCE today didn't help. Consumer sentiment didn't help. Inflation expectations not helping. Bloomberg Economics U.S. economist Stuart Paul live from New York right now. Stuart, when's the recession?
It's certainly not imminent, but I will say that there was nothing in the data this morning that was nearly as sweet as the cherry blossoms you have in Washington right now. Core inflation surprised just a touch to the upside, registering 0.37% month on month. And basically across the board within the inflation elements of the report, it was pretty bad. Services prices continuing to rise, and it's not just shelter within services, it's financial services, healthcare, and so on. On the goods side, durable goods inflation continuing to rise, and that's even before we actually see the implementation of Trump's planned reciprocal tariffs. And so on the inflation side of the report, things are just outright bad. If you look at consumer spending, it was a pretty disappointing report. Nominal spending rising 0.4% on the month. In real space, quite a bit worse, just 0.1% increase. We're on track to have an annualized pace of Q1 personal spending growth of just about 0.2%. Actually, probably close to zero, maybe even declining, depending on what we see in March, but basically nil for the quarter on real personal spending so far. That compares to a 4% annualized pace of spending growth in the fourth quarter. So recession not imminent, but if anything, there's clearly two-sided risk here for the Fed. Inflation pressure is still mounting, and on the real spending side, things look pretty dismal as consumer sentiment wanes.
Jeez. I mean, I was kind of just being a pain with the recession question, but now I'm wondering if that was actually the real question to ask here. Did you know there's a Bloom cam? Brendan in the control room just put this in front of me. I'm looking at people milling around the tidal basin, spending all kinds of money here, Stuart. That's the idea, right? You come to Washington, you see the cherry blossoms, you pay too much money for the hot dog when you go to the truck, then you take the family out after you go to the Smithsonian. A year from now, will that be happening?
Probably a bit less consumer discretionary spending on services. Already we're seeing consumers reining in their spending on services. I think that Washington right now, this is a bit of a seasonal case with cherry blossom season, with folks going to the Smithsonian. If you walk around New York City, it's not quite as much consumer enthusiasm walking around Central Park or 57th Street, for example.
Right.
But where we do see the spending is on some of the goods that folks are expecting to be tariffed in the future. Folks are spending a little bit more in February on autos, on household appliances, things like that. Now, the problem is that folks increase their spending a bit on those durable goods in anticipation of tariffs coming down the pipe later on, reciprocal tariffs getting implemented on quote unquote Liberation Day on April 2nd. But the thing is, how many washing machines can you buy, right? How many new dishwashers or vehicles can you buy? Once you pull that spending forward, that's mostly one and done. So as spending on those discretionary services, those experiences start to wane, as you lose the cherry blossoms, getting a bit deeper into the spring and into the summer, I expect to see a further pullback in spending, actually.
It just bothers me when the tourists, we need them here, we want them to spend money, but the jaywalking, it's already hard enough to get through the intersections here. Stuart, you mentioned Liberation Day. I will love seeing the data on auto sales for this weekend. You know, you talk about this idea of front-loading, front-running. There's going to be this blast of buying potentially by consumers who are all talking about tariffs. This is dinner table conversation, apparently, not just Bloomberg conversation. And so you creep into next week, and we're going to Monday, Tuesday, Wednesday still be fretting about this. I guess my question to you is there any expectation in the markets, whether it's the treasury markets and the stock markets? Because I know what I think the answer is here in Washington. Is there any expectation this will be over? Or do we just reset the clock on new uncertainty about tariffs next week?
I think that just the uncertainty continues in rolling waves. Just when you get the announcement on auto tariffs and you get to start thinking a little bit about what March auto sales are going to look like, what auto sales will then look like after the tariffs are implemented, how you start comparing domestic producers versus foreign producers, just when you think you have a little bit of clarity, Trump then also includes in his announcement yesterday, well, maybe the reciprocal tariffs aren't going to be as bad as some folks are anticipating. Well, let's break it down a little bit. How bad could it look? Well, if we just go, tariff for tariff, not terrible. If you start stacking up all the different items that Trump compares to tariffs, a value-added tax, for example, non-tariff measures, including regulation that are imposed on U.S. companies, you start getting to an effective tariff rate on all of our imports of nearly 35%. Right now, we're running just a touch under 5%. So and again, as Trump was saying that he was imposing a tariff on autos, saying maybe it won't be just that severe. So there's this huge gulf between where we are today at about a 5% effective tariff rate and what it could look maximally at 35%. I don't know how you could shrug off uncertainty just quite yet, how you could attach yourself to anything truly concrete.
You ever been to Greenland, Stuart?
I have not.
Traveler?
I have not been to Greenland. I'm not sure if anyone with an American passport is quite welcome, so I'm not booking my trip anytime soon.
A couple of them just touched down. J.D. Vance has arrived, which we're going to be talking about. Stuart with the cherry blossom tie. Nice job. Great to have Stuart.
Very thematic, right?
Bloomberg Economics. I mean, listen, did you hear him weave that narrative here live on the air? Bloomberg Economics, U.S. economist. Many thanks to Stuart Paul.
You're listening to the Bloomberg Balance of Power podcast. Catch us live weekdays at noon and 5 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Tough tape if you're making your debut in public markets. CoreWeave right now indicated at $39.25 a share. That would be below the IPO price of $40 a share, and it was already downsized. That's why the company only raised $1.5 billion in that initial public offering. The original range would have meant it was going to raise up to $2.7 billion. But the day is a rough one if you're long equities, and it may be not a good one for CoreWeave to make its debut in. And part of that, Joe, is, of course, because of the economic data we got over the course of the morning, beginning with PCE, looking at the Fed's preferred inflation gauge, which came in hotter than expected. Then you look at real personal spending, which gives you a look at what the consumer is doing. That's softer. Mm-hmm. Add on University of Michigan sentiment down, inflation expectations up, specifically long-term inflation expectations. 5 to 10 years out, consumers think it's going to be at 4.1%.
It's a problem. And when you look at Wall Street, you don't have to guess too much about the way investors feel about this. The question is the reaction justified? And that's where we start our conversation with Anna Wong with us in studio, Bloomberg Economics chief U.S. economist. Ahead of our talk with Joe Lavorgna, Anna, it's great to see you. Welcome back. Would you say that the reaction here in the markets is justified? We're hearing the R word more often, the worries about the jobs report next week.
Yeah, I think what's interesting is that you're hearing the R word more than the S word, because if you look at the way that the equities market corrected today, it's completely growth fears, right? It's consumer discretionaries, information technology. However, the bond market rallied, which suggests that the upside surprise to core PCE reading today was actually not the dominant driver. So people are bond traders are not so much worried about inflation as they are worried about growth. This is why the bond market is rallying.
Yeah, yields going down instead of up, which is where you think they would be going if the expectation was the Fed is not going to be cutting anytime soon. But the Fed has also pushed back against the notion of reading too into some of the sentiment data. Specifically, Powell was asked about and kind of pushed aside concerns over UMich inflation expectations data specifically. Anna, how much longer can that go on when we're starting to see it in the hard data too to some extent?
Yeah, so the University of Michigan survey has moved toward a web-based survey late last year. And as a result, the share of Democrats respondents has increased, and especially those who self-identify as strongly Democrats. And so as a result, the inflation expectations really surged. Because if you look at this, the inflation expectations really is very much along partisan lines. The Republicans actually don't see a problem with inflation. And I think you're right on the money, Kailey. The Fed has said that they are not going to pay too much attention to the inflation expectations, and which in the UMich reading, and this is why the bond market is kind of dismissing the UMich reading. And bond market being so forward-looking, they looked at this February reading for core PCE inflation and kind of dismissed it as backward-looking. And they are more worried that the growth the consumer pullback would be more of a disinflationary driver, which will overwhelm even the April 2nd, Liberation Day tariffs.
Liberation Day, and Donald Trump is going to be speaking in the Oval Office shortly here as part of an unrelated event. Anna Wong, you're an economist, you're a forecaster. You're still expected to do your job, which is to forecast what's coming in the economy. Is your forecast only as good as next Wednesday?
Well, we're forecasting as of next Friday's payroll. And so far, our forecast for payroll is actually pretty solid. We're expecting a 200K increase in non-farm payrolls next Friday. And a lot of this anxiety over growth has to do with what we're reading in the news. And I think, as Powell said, the hard data so far have not indicated it. It's mostly in soft data.
The anxiety over tariffs, though, is what we're talking about, right? I mean, doesn't that change your world on Wednesday, depending on what the president says?
Yeah, so if you look at market options data, what we are hearing is that the anxiety over Friday, the expected volatility on Friday's payroll report is bigger than the ones being priced in tariffs on Tuesday. I think it's because the market kind of think that the announcement from tariff would be more lenient and not as crazy as the worst case scenario, whereas there's so much more uncertainty with non-farm payrolls.
Well, and when we consider uncertainty and what the market is going to react to, I also wonder here, Anna, as we're looking at the data which indicates a consumer that isn't feeling great, not good vibes. If that for American companies who are thinking about the kind of higher input costs that they're going to face and their ability to pass that on, is it a suggestion that actually that pricing power this time around, where they were able to exercise it during the supply shortages after the pandemic pretty successfully, isn't going to be as successful this time?
Yeah, I think the key here is this economic concept of budget constraint. And in the pandemic, the budget constraint was actually expanding because of the fiscal stimulus and also precautionary savings people have from not spending during the pandemic. But now this budget constraint that a household faced is actually hard. If anything, it's decreasing, right? Because on one hand, it's been eroded by high inflation. On the other hand, many of these income transfers that under Biden administration you see are being are expiring. For example, just one idea is like many student loan borrowers had expected that their student loans would be forgiven, and they have continued with spending, acting as if it would be forgiven. But now these income-driven payment stoppage has been challenged, and it looks like the Trump administration would be pulling the plug on all this stuff. And so I think a lot of this is about the budget constraint. As a result, there's only so much money a household can spend. If things are more expensive on one end, they're going to pull back on the other. So as a result, yeah, I think the companies, American companies, won't be able to pass through these all of these increase.
All right, not a good sign for the corporate earnings outlook. Anna Wong of Bloomberg Economics, thank you so much for joining us. And we want to expand on this conversation now and turn to Joe Lavorgna, former special assistant to the president and chief economist at the National Economic Council during the first Trump administration. He's now managing director and chief economist for SMBC Nikko Securities America. Welcome back to Bloomberg TV and radio.
Thank you.
Joe, obviously there is a lot of concern out there and a lot of talk about the R word. When you look at the data, both the hard and the soft, do you have the same growth concerns the market seems to right now?
I don't, and Anna's great. We actually overlapped a bit in the first Trump White House.
Great.
As she mentioned, the hard data still look pretty good. The trend in private job growth is turning up. Claims numbers are still relatively low. Gasoline demand is pretty decent, which is a good sign that households are out driving around, and when they do that, they typically are spending. The weekly chain store numbers are holding up well. So I understand the concern in the market. It probably relates to the equity market softening. If it softens enough, there's concern there might be a negative wealth effect. That in turn would really dampen consumption because a lot of the gains recently have been at the higher income levels. But right now, the hard data look good.
It's still Biden data, Joe? When's it Trump data?
That's a loaded question, Joe. What I will say is that the inflation is a problem. And inflation is a lagging indicator. The Powell Supercore was up 0.4. It was up 0.3 the month before. The 3 and 6 month rates of change are running up in the mid 4s. That's a problem. That's a function of previous policy, both of the last administration and also the Fed, which kept rates too low for too long, and may have exacerbated the situation, Joe, when they cut rates last fall. The administration has a lot of work to do, the current administration, in getting inflation down, and I think they're serious about it. We certainly need the lower energy costs. That will help. We need more capital spending, supply-side initiatives to increase the economy's productive capacity will help. My fear is that too many people focus on the demand side and think you need a recession to bring inflation down. That's not necessarily the case.
Well, sure, if we consider the supply side dynamics as well, which is what you're speaking to about the ramping up of our own capacity. I just wonder about sequencing here, Joe. Obviously, we've talked a lot about tariffs hitting first before, say, expanded tax cuts hit. There's also the question as to whether or not, yes, tariffs are incentivizing more being made in the U.S., but it takes time to build those factories, to hire those workers. And so how do you see things playing out sequentially here? Can all of that kick in time to avoid the worst case scenario?
It will depend in large part on the extension of the 2017 Tax Cuts and Jobs Act and the other programs that the president wants to put forward in that. For example, lowering the corporate rate from 21% to 15%, and then having your 100% expensing on CapEx back to January 1. So the sooner we get clarity on the tax bill, the better. My view when I talk to people is I understand the uncertainty around tariffs. I see that mostly as by design, not as a bug. In terms of the sequencing, we're going to get more information next week. as the budget comes into focus, since I believe tariffs, this is me speaking, tariffs will be used as a revenue source among other the desirous things, that you're going to have some minimal level of tariffs to raise those revenues, and we'll know more exactly what everything looks like once we get a budget bill. And I'm maybe up on the optimistic side, but I think we can get a bill before Congress recesses this summer, and that'll be helpful because that'll provide a lot of clarity on the outlook and can get these companies to start to reinvest in CapEx and not worry about a massive tax hike that would come in 26.
Well, you just said something really important, Joe Lavorgna. Tariffs as revenue generators. That would mean that we'd have to have some tariffs in place for long enough to generate revenue. And there's a lot of sort of cross current here in Washington. A lot of people believe that the president will have meetings over the weekend, find concessions with some countries, talk about exceptions and carve-outs on Liberation Day next week. At some point, there'll need to be something across the board that sticks to generate revenue.
Right.
Which of these tariffs do you think that might be?
What makes the most sense to me, if you look right now, we're going to run about $90 billion this year on tariff or customs duties revenues, which is a decent number, up a lot from where we were prior to Trump 1.0. And if with the auto tariffs, those could raise another $100 billion. We're not assuming long-term behavioral changes, but it's going to raise a substantial amount of money. If you start to carve out all these different things, then you have less, you're not going to raise the money, which in my opinion would make it harder to do the other factors that are very important, keeping marginal rates low on both capital and labor, and then of course extending no tax on tips or making no tax on tips, Social Security benefits, overtime, et cetera. It's going to be much harder to do that if you don't have a revenue source coming through tariffs, especially if you have a lot of Freedom Caucus, fiscally conservative members. Even though it won't be scored in a budget, you'll need them on board with passing this legislation.
Yeah.
And also, of course, the SALT tax. People in here in Connecticut, California, et cetera, want that deduction to come back. So there are a lot of things in this bill, and I don't see how you're going to get everybody on board unless you don't have a tariff. But also, last point I want to make on this is if you want to re-onshore and reindustrialize, tariff is central to that because it's going to incentivize capital to come back into the U.S. Without a tariff, that incentive is not going to be anywhere near as strong.
Yeah. I just want to bring some breaking news to our audience here on Bloomberg TV and radio. Joe, we've been waiting for it, and CoreWeave has indeed started trading. The shares opening at $39 a share. That's 2.5% below the $40 per share IPO price, which again was downsized. Part of that having to do, Joe Mathieu, with what is deteriorating market sentiment, at least in the equity market, it seems certainly is the case today. We're now slightly lower on 39. CoreWeave, a rough debut as this AI company is trading into a market in which the brighter NASDAQ 100 is down 2.6% right now. Yeah,
you're stuck with two Joes at the moment, Kailey. This is below $39. Remarkable. This was bad news when it fell to $40 before this started trading, knowing as well that companies, including NVIDIA, partner companies, Microsoft, NVIDIA, bought an enormous number of shares to try to shore up support for this IPO. And while we could be in a different world on another day, this already was a bad day, as you mentioned, for the markets, the AI story being challenged. And now seeing this at the moment, it's not going to make a lot of people in the AI space feel better.
Yeah, $39.40 roughly per share right now is what we're looking at. And Joe Lavorgna, when we consider what this may signal more widely about sentiment, obviously we began this conversation with concerns around growth, which you don't necessarily share. But when we think about the kind of market forces and how propped up, at least until recently, this market was by bets on artificial intelligence and the productivity gains and the revenue kind of driving force that it could be. Do you sense that we are kind of rethinking that whole narrative and that perhaps that isn't going to be able to be leaned on for support at the same time that we're seeing at least some degree of softening in the economy? We
probably leaned a lot on that narrative because in a lot of these cases, the price to earnings and price to revenues and margins, a lot of good news is priced into the AI sector, broadly speaking. So I can understand why the market's pulling back just because it was due to pull back. Especially after some incredible runs. And of course, as you know, there's been a very narrow concentration of stocks driving the market. So this doesn't surprise me. There'll always be a reason why eventually the market needs to reset. But the longer term productivity trend to me is very powerful. Productivity growth accelerated under Trump, the first administration. It continued to accelerate under the Biden administration. And I firmly believe if we keep taxes on capital low and we can have a more productive, efficient economy, and part of that does relate back to what happens on the government spending cuts. If we could, I'm going to paraphrase Secretary Besson, if we can delever the private, if we could delever the public sector and lever up the private sector, that will help underlying efficiency and ultimately productivity. So I'm a huge bull on the equity market and the economy over the long term. And obviously, short term, there are some digestive issues in the market, but that doesn't leave me pessimistic, or make me pessimistic, I should say.
Watching the initial trades, CoreWeave, with Joe Livornia live on Bloomberg TV and radio, just above $39, 39.5 here, down about 1.5% from the IPO price. Joe, we've asked you a couple of times recently about President Trump's view upon and relationship with the stock market, whether it had changed since the first term. Does a down day like this get his attention? What's he thinking?
I don't know. I always say I'm not a mind reader, but the things that obviously the president cares about are everyday issues, and that relates to our mortgage rates down, what's the price of gas, the price of food. Obviously, the equity market's important. A lot of people don't have necessarily the equity exposure that people in the markets have, so perhaps the professional investor and the professional and managerial class gets too worried about the day-to-day wiggles in the market. But ultimately, if we have the right policies in place and we're able to do the things that the administration and the Congress ideally will pass, then the outlook should be good. But we'll see. We'll see. Several years from now, I don't think my guess is the administration isn't worried day to day on market reaction. But where are we a year from now? Where are we heading into the midterms? What does the economy look like? What's the equity market doing? Maybe people are just too focused on the short-term dynamics.
A lot of big questions to be answered. That's why we'd love to keep talking with you, Joe, and we
thank you.
Appreciate the time as always. Joe Livornia with us live on Bloomberg TV and radio as we watch on YouTube as well the opening trades of CoreWeave.
You're listening to the Bloomberg Balance of Power podcast. Catch us live weekdays at noon and 5 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
As we turn to Pituffik, Greenland, here on Balance of Power, home of the northernmost base for the U.S. Space Force. You may not have known that, Kailey, but that is where the vice president is found today. J.D. Vance, not just the vice president, the second lady's along for the ride, as is someone we've been talking about a lot this week, Michael Waltz, the president's national security advisor. Presumably, this is a round-trip ticket for all of them. They're not going to be there for long either. A couple of hours?
Yeah, like
for the whole
3
trip?
hours on the ground after. It's going to be collectively, I think, 12 hours in the air. It's also 18 degrees Fahrenheit in Greenland right now. So
yes, very cold.
they looked, pretty
You might
cold
have
when they
seen
got off
J.D.
the
Vance,
plane.
according to the pool report, stepping off the aircraft, quote, "It is as cold as S here. Nobody told me." We're actually waiting for him to start speaking. And it's interesting, Kailey, we got a bit of a readout on what he's going to be talking about here. The mistreatment of the Greenlandic people, treated like second-class citizens, allowing infrastructure on the island to fall into disrepair. His message to Danish leaders today.
Yeah, he's basically suggesting that Denmark is not being a good steward of this territory that the Trump administration has made it very clear they would actually like to have control over. They think it is strategic for our national security when we consider our positioning in the Arctic. The problem is the Danish, who, by the way, are NATO allies of ours, part of this wider alliance, are not too into the idea, and they've been pushing back on this notion quite heavily. And that is also why, in part, we have seen what was the initial more broadly planned trip being scaled back to just this visit to just this base.
Yeah, they're way up north for this, and only for a couple of hours here. Remarkable to hear from John Rebek Clemenson of the Danish Defense Academy. Told TV they're the biggest foreign policy crisis since World War II for Denmark.
So let's talk about that crisis, if it is indeed that big, and turn to Rachel Rizzo, who is here with us in our Washington, D.C. studio. She's non-resident senior fellow at the Atlantic Council's Europe Center. Thanks for being here on Bloomberg TV and radio. Rachel, is this really where we are? Is this a World War II or a crisis we haven't seen since the World War II era with what is an ally of the United States?
Yeah, I mean, over the last few months, Donald Trump has been extremely aggressive in saying that he wants the United States to acquire Greenland. Now, J.D. Vance can go to Greenland and say, Denmark has not been a good steward of this territory, but this goes a lot deeper than that. There are critical raw materials there that are untapped gas and oil resources. It's a strategically sensitive location up in the Arctic, especially as Russia and China increase their military exercises up there. So there's a lot more to it than just going to Greenland because Denmark has not been a good steward of this territory.
Well, are those good reasons? Speak to the strategic aspect of that. We already have a Space Force base there. We can obviously go there as we see fit. What would owning the territory do for us that we don't have now?
Yeah, that's, I think, the key question here. I mean, we do have permanent military presence on Greenland. We've had it there for decades. And as I said before, it is strategically important. But remember, Donald Trump is very focused on this economic competition with China. And right now, China owns the mining, processing, refinement of about 80% of the world's critical raw materials. 25 of the European Union's 34 critical raw materials are located in Greenland. Now, all of this is untapped wealth, of course. This is a harsh territory. It's under a lot of ice. This is a small economy. There's only 56,000 people. They're heavily reliant on Danish subsidies. So that wealth is there, but it's expensive and it's hard to get to. So this idea that we're going to acquire Greenland and somehow reap all of these benefits, I think is a stretch.
Okay, so when we consider the potential reward here, which with the potential risk of disrupting a relationship with an ally, I do wonder when we consider Denmark and NATO more widely and potential tension in that relationship that could be further amplified by this. It already is pretty tense. Does this actually serve Russia, which theoretically with an acquisition of Greenland or what have you, would be trying to counter to a greater degree because it may create more division between the U.S. and its allies?
So this is Vladimir Putin's favorite thing. When NATO allies are at each other's throats and there are fissures and divisions within the alliance, he loves to come in and exploit those divisions through things like cyber warfare, hybrid warfare. But looking at Greenlanders, there have been polls that have been done. 85% of Greenlanders do not want to be part of the United States, but also there's polls done in the United States as well. 70% of Americans don't want Greenland as part of America either. So overall, this is just a really unpopular idea. It's also a really unpopular visit. They've had to scale this visit down. And it's creating a bunch of tension with Denmark, with our NATO allies. And I think that the quote you said earlier, that this is creating a crisis that we haven't seen for quite some time, is very true. And it's going to be interesting to watch how this plays out, I think.
Vladimir Putin at a policy forum yesterday. It can look surprising, he said, only at first glance, and it would be wrong to believe this is some sort of extravagant talk by the current U.S. administration. It's obvious the U.S. will continue to systematically advance its geostrategic, military, political, and economic interests in the Arctic. So is he going to help us do this?
So that's really interesting because that sounds like something that Vladimir Putin would say about what he's done in Ukraine, right? It's this very imperialistic talk about regaining territory, regaining this greatness that has been lost. This is kind of Putin's approach to this, but it's also Donald Trump's approach to the United States and our foreign policy. So I think when it comes to Greenland, there is a sense that he wants to counter China, but also counter Russia in the Arctic. But again, the steps that would have to be taken for this acquisition to actually go through and the expense that this would cost the United States is extravagant. So I think we need to keep that in mind when we think through the realistic outcome here and the benefits that the United States would be able to reap from this.
Well, and I wonder if there's a parallel to the efforts that are currently underway, still being negotiated for the U.S. to have rights to minerals in Ukraine and other, according to our reporting, at least in a revised deal, right of first refusal, essentially, for investments in infrastructure. When we're talking about the kind of investment it does require to build out that capacity, to get the ore out of the ground, to get it where it needs to go, how realistic are those objectives on the part of the United States?
So as I was mentioning, Greenland is harsh territory. This is the northernmost island in the world. It's the largest island in the world, but it's also under a ton of ice. So this would be very expensive. But, when you compare it to Ukraine, we don't need to own Greenland in order to help develop it and in order to help, reap some of those benefits that could come from potential mining. I think we're looking at benefits that would happen years down the road. We're not looking at months. Like this is a serious investment that would take a long time to actually come to fruition. But you can draw parallels here when it comes to what the president is trying to do in Ukraine. They're the breadbasket of Europe. They have a ton of critical minerals as well. So I think it just goes to show that you don't need to acquire a territory to be able to develop it and reap economic benefits from it.
Would it help to acquire that territory if you're building a so-called golden dome that the president has talked about? Would we be positioning missiles, for instance, in Greenland?
So the interesting thing about this is that I don't think the president has actually sat down with Denmark or the Greenlanders and said, here is what we actually want. He's had these not even thinly veiled threats. And I think the Greenlanders are sitting here thinking, have a conversation about what you want in terms of U.S. permanent presence here. Do you want more missiles? Do you want a golden dome, as Donald Trump has talked about? And I think that there would be some sort of negotiating possibility there. I don't think that's totally an off-the-wall idea, but they have to know what the United States wants in order to come to the table, and I don't think that this administration has taken that approach yet. And I think it would behoove them to maybe change their approach if this is really what they're looking for.
So instead of going there to scold, J.D. Vance could presumably be sitting down with officials to talk about these issues today, right?
Absolutely.
Not doing that, though.
They could have been doing this for months. And, Donald Trump pitched this idea back in 2019. This isn't new, but he wasn't that serious about it back in 2019. He sort of mentioned it. Other presidents have mentioned this in the past as well, back in 1946, back in 1867. So it's not a totally off-the-wall idea. But this approach that he's taking, it's extremely provocative. It's seen as extremely aggressive. And the Greenlanders and the Danes are sort of backing off and, are on the defensive, clearly. So I think that it would probably be a good idea for them to sort of change their approach here if they want to have a cooperative relationship, which I would assume that they would like to have a cooperative relationship given the strategic vulnerability of the assets that we have in Greenland.
Well, and when we consider in our final moments here, Rachel, this notion that a lot of what Trump is saying now hasn't changed from what he was saying in his first administration, inclusive of Denmark and other NATO countries who he thinks needed to pay more in their fair share, that Europe should be investing more in its defense. That does seem to only really be changing now, though, even though they knew he was coming into office and has espoused these ideas in the past.
Absolutely. And I don't want to criticize Biden too much, but I do think this message that he sent the Europeans that the United States is back after he won the election in 2020, ignored a lot of the political things that were happening under the surface. And the Europeans, I think, should have been preparing more over the last 4 years. But when it comes to Denmark, Denmark lost more soldiers per capita in Afghanistan in support of the United States than any other NATO troop contributing nation. So when J.D. Vance says that Denmark is not being a good ally, let's actually remember that they're increasing their defense spending along with all of the other NATO allies are increasing as well. And let's, I think, have a better relationship with Europe. I mean, this is a really kind of pointless fight that we're starting.
It's really great to have you. Thank you for coming in and sharing the insights. Rachel Rizzo, non-resident senior fellow, Atlantic Council's Europe Center. Kailey, as we watch J.D. Vance make his visit to this base, imagine this. Locked in ice for 9 months out of the year, this Space Force base. It is in constant darkness from November to February and constant daylight from May to August. Quite a lifestyle.
Quite a lifestyle. Quite a contrast to here in Washington, where
True
the sun shining, the cherry blossoms are out, everyone's flocking to the tidal basin. We're at least warmer than J.D. Vance and the
Big
second
time.
lady are right now.
But they'll be back, I guess, within hours here
Yep.
on a 2-hour tour of Greenland. Cherry blossoms peaking, as a matter of fact, this weekend. It'll be 80 tomorrow. Thanks for listening to the Balance of Power podcast. Make sure to subscribe if you haven't already at Apple, Spotify, or wherever you get your podcasts. And you can find us live every weekday from Washington, D.C. at noontime Eastern at Bloomberg.com.